Let's talk about the turn that everybody's essentially talking about, and that is that its investments are now accounting for a very significant part of their profit.
Well, so remember, this is first and foremost still a very large, or the largest search engine platform out there. And even after 20 years, this business continues to grow somewhere between 15 and 20%. The investments you're talking about are not only fueling continued growth in core, but also allowing them to move into tangential areas like YouTube. It's really not tangential anymore since the acquisition, but clearly that has become a major fuel for growth, and that's why their overall growth is well north of 20%. And they have all these bets, which for now the street is giving them a pass on. As long as they continue to outperform on their core, they have carte blanche to continue to invest very aggressively.
Anthony, is it enough to change your view on the stock, or is it more a ratification of what bull arguments that have been made up until now?
I think it's a relief of what could have been construed as a bear case, which is that they're spending in an inflated way. I think this improves, to your point, the narrative in a sense that the excess revenue growth that they delivered to the street dropped to the bottom line. And so you really had a very strong quarter in terms of not only revenue, but also how that revenue translated into operating income growth, ex the fines, and then earnings. So if you look at it in terms of regulatory relief, better profitability, I agree, some of those investments starting to bear fruit and pay off. And you look at it in terms of that very strong revenue growth remaining sustainable as driven by YouTube and search and other. It really comes together as a very nice stock story, particularly with the stock trading at only mid-20s, 25 times forward GAAP EPS. And so for those reasons, I think the stock continues to work, continues to grind higher. And I think it bodes well for Facebook, which is the other kind of member of the FANG where, we've got that coming up tomorrow night. Probably see a rising tide lift all boats in digital media, I would think, from this report, and as a lateral this report. And so Google and Facebook, I think you could say, are great, growth relative to stock valuation stories at this time.
Yeah, with Facebook up 2% in reaction. Then there's also the European fine, $5 billion, record amount. Just last week. I mean, we talked to the EU chief antitrust regulator who issued this fine and ordered Google to change its business in Europe. Remember, here's what she said when we asked her what the problem was with Android.
This is not about Apple. This is not about Android. This is about Google behavior, a behavior that's illegal for a dominant company because it's unlocking, locking down competition and disabling innovation and choice that we would all like to enjoy.
Youssef, did management last night convince you that this isn't going to be a major headwind to Google's business and growth in such a major market like Europe?
Not at all. Not at all. I would say if there is one cloud, one dark cloud over Google or Alphabet, over time, this is not going to show up in Q3 numbers. But I think over time, particularly in 2019, then GDPR to a certain degree may have an impact on YouTube, not on the search business. But this Android ruling has the potential of really changing how the company is conducting that side of the business. So the $5 billion in my mind is really a shot over the bow in how serious the regulators are. And honestly, all the checks that we've been getting from Europe so far show that the Europeans are really not happy with how Google has been kind of behaving, and Facebook to a certain degree as well with GDPR. So, and to your comment earlier about Juncker coming to the White House, this is the European regulators have no incentive to help these massive US technology companies make even more money in Europe.
Anthony, on the subject of making more money, it was interesting, I think, to note that for the first time, Alphabet told us about Waymo a bit more, 8 million fully autonomous miles. What kind of an opportunity do you see for the company in terms of actual profitability at some point from the Waymo unit?
I think it's tremendous. I think all of our checks show that Waymo is well ahead of GM Cruise and the other competitors in terms of autonomous driving. You'll see commercialization of this in Phoenix. Already the first rider program, the early rider program is underway in Phoenix. And I think by the end of the year, you'll start to see kind of videos of of robo-taxis picking up passengers, delivering them to the grocery store, no driver. And when we start to see that working and start to see the commercialization start to take effect, I think analysts and investors are going to afford a very robust valuation for Waymo within Alphabet. We think potentially in excess of $50 billion. And I think that only underpins some of the moonshots and the options, the opportunity that you have as an investor in Alphabet. How quickly will we live in a world where robo-taxis are ubiquitous? I don't know the answer to that, but I think that when you look at the business model, Google will be, Waymo will probably be the first player to $1 billion in revenue in that space. They start with Phoenix and they'll go to 3, 5, 10 cities, and away we go. They're certainly contracting to acquire a lot of cars from both Jaguar, Land Rover, and Fiat Chrysler. So very exciting. I think it's an incredibly grand opportunity for Alphabet and Waymo.
Finally, Youssef, can we spin out any implications for Facebook on Wednesday, Amazon Thursday, or even Twitter on Friday?
Absolutely. I think, as Anthony said earlier, the Alphabet's performance yesterday, particularly on the YouTube side, which they didn't quantify, but they certainly qualified, speaks volume about strength across the overall online advertising spectrum. Remember, the online advertising space is growing somewhere between 15 and 20%. Google is growing in the mid-20s. We think Facebook is going to show growth of north of 40%, which, considering their size at 55 billion, is very, very massive. So we continue to have Facebook as our top pick. On Amazon, I think Amazon remains in a league of its own. Certainly their advertising business, which is brand new initiative that they have shared with the street at some 10 billion, is certainly going to be a major focal point and a big driver of operating margins over time. But short term, it's really all about e-commerce. And as Prime Day showed last week, growing at 60% year on year, they continue to dominate. They continue to grow market share at the expense of everybody.
Yep.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.